Bitcoin investors are hooked on the renewed interest from major Wall Street players, especially with prices stuck in a tight range for weeks. Big names in finance have recently put proposals before the SEC aiming to bring about a new way for the masses to invest in Bitcoin.
Asset management giant BlackRock took the first steps yesterday to launch a spot Bitcoin ETF, filing an application with the SEC to launch the iShares Bitcoin Trust.
This is all about sentiment, right? BlackRock filing for a Bitcoin ETF is a huge moment.
Would you bet against BlackRock?
No.
You know, they're the behemoth.
BlackRock, the largest asset manager in the world, filed to offer a spot Bitcoin ETF, sparking competition as other Wall Street players rushed to submit filings shortly after. Other big investment firms like Fidelity, ARK, Invesco, and WisdomTree also hope to take advantage of Bitcoin's reputation as digital gold.
Somebody asked me, oh, why is Bitcoin an investable asset? I say, well, why is gold an investable asset if you believe that, right? And you see a lot of these same qualities, whether it's, an inflationary hedge, a non-censorable asset, or at least not easily censorable asset that you see with gold.
20 years ago now, with the advent of a gold ETF, that really democratized gold investing.
The Bitcoin spot ETF is an indirect way of holding Bitcoin, right? So if you invest in a spot Bitcoin ETF, you're not directly buying Bitcoin, you're buying shares of a fund that basically holds Bitcoin.
The idea of a spot Bitcoin ETF isn't new. A decade ago, the Winklevoss twins filed for their own spot Bitcoin ETF called the Winklevoss Bitcoin Trust, but ultimately failed. And right now, if American investors want Bitcoin exposure on regulated exchanges, the closest option would be a futures ETF.
No spot Bitcoin ETF has been approved by the SEC, at least not yet. There are several futures Bitcoin ETFs that are trading. These futures Bitcoin ETFs are backed by Bitcoin futures contracts.
An ETF, like the ones that exist, the ProShare product, for example, tracks the price performance of the underlying futures, which track Bitcoin. So, kind of the benefit of that is liquidity and regulation. But the downside of that is that the futures have a cost, implicit cost themselves. They may or may not track the actual spot price of Bitcoin, but it's the closest thing to it.
Simply put, the futures ETFs don't require an underlying holding of Bitcoin since they're backed by futures contracts. But a spot Bitcoin ETF could change how Wall Street buys into the cryptocurrency. And the big question is, if approved, how will this affect markets? An approved spot ETF means asset managers would have to hold as much Bitcoin as the ETF is worth, triggering a potential wave of institutional holding of Bitcoin.
If investors bought $100 million of a spot Bitcoin ETF, the ETF would be obliged to go out and buy roughly $100 million in Bitcoin, minus fees, of course. The entity responsible for holding the asset is called a custodian.
The amount of Bitcoin that would need to be held for a spot ETF depends a lot on what the demand would be, the initial demand for that vehicle or product. Given that the ETF applications are from larger asset managers, it's likely that it would be in the hundreds of millions, if not low-digit billions.
The hope is institutional investors who might have been reluctant to hold Bitcoin itself will see the new asset as a safer way to buy in and set off a buying spree of Bitcoin along the way.
Over the last 5 years, more and more global investors are asking us about the role of crypto.
If you get products like ETFs out there, which are then regulated, trade on an exchange, you kind of have your bid-ask spread on a daily basis. You can monitor trading efficiency. You can see the transparency of what is in the ETF and what the cost is. That will open up, certainly the ability and use case for larger institutions to deploy Bitcoin into their portfolios that might not have done it before.
And use in investments like retirement accounts could drive huge gains in Bitcoin's market cap.
I think there's almost 40 trillion of retirement assets. And you can imagine a scenario where 5 to 10% of those assets end up becoming allocated to Bitcoin. 10% of a $40 trillion retirement assets, that's $4 trillion. The total current market cap of all cryptocurrencies is around 1 trillion. So that would be 4 times the size of the current market cap.
Still, an ETF faces a huge hurdle: approval from the SEC. The agency has denied several proposals in the past.
In the past, the SEC's denied the applications. You could say for a couple of reasons, but one of the main reasons was around the potential for market manipulation and the lack of a surveillance sharing agreement with a market of sufficient size, an underlying market of sufficient size.
and the agency launched a crackdown on the crypto industry in 2023.
The timing of BlackRock's filing, I think, was certainly surprising given the current regulatory backdrop in crypto. The SEC has been extremely aggressive over the past year with essentially a regulation by enforcement approach.
After BlackRock's initial filing in June, the Wall Street Journal reported that many of the ETF applications had to refile their proposals after the SEC deemed applications inadequate. Updated filings from firms include surveillance sharing details to watch for potential market manipulation.
They're bringing together some pretty good partners from a custody standpoint. They've got Bank of New York Mellon, they've got Coinbase,
Right.
They've got an agreement, a surveillance agreement with NASDAQ to help with the security aspect of it. So they're trying to show the SEC that they're putting all the safety provisions in place to give them the confidence, to give them that acceptance of their application.
If the SEC feels confident in the safety of these ETFs, if it approves them, it could be a boon for Bitcoin investors. If not, those investors will likely be stuck on the sidelines looking for another reason to start Bitcoin's next bull run.